I think there is a decent chance we'll see the Santa Claus rally in 2024. But of course, the overall broader market and the context there will definitely be a huge factor to consider. Historically, the last few trading days of December and the first few days of January usually trying to bring that lift to the market. And this year looks set to follow that trend thanks to some supportive factors.
Consumer spending and coming out of the holiday season is typically sort of a telltale sign of how the real U.S. economy or the real U.S. consumer is really feeling. And as we look at that, they've held up pretty well, throughout the years, even with high inflation.
On this episode of Early Bird, will we see a Santa Claus rally in the stock market this December 2024? If so, what stocks or sectors should investors watch? If you're an investor looking to stay on top of the latest market trends, then you're listening to the right podcast. This is Early Bird, and I'm your host, Stephen Lerner. Before we get to today's discussion, let me tell you how you can save time and beat the market through Early Bird, a free daily email newsletter featuring commentary about the latest trends in stocks, cryptocurrency, and equity crowdfunding. Early Bird is designed to help individual and non-professional investors stay on top of all of the critical investing trends. The newsletter is 100% free and is sent to your email box each weekday morning. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, today's discussion. First, we welcome Michael Neuenswander, principal owner at Outlook Wealth Advisors. All right, Michael, welcome to the Early Bird podcast. How are you doing today?
Good, thanks. Thanks for having me. Glad to be here.
I'm glad you're here. We're talking about the Santa Claus rally, that time of year when, in around December, stocks begin to have their own little mini rally that sometimes happens every year, but sometimes doesn't. So we're going to find out what might happen this year in 2024. Michael, do you think we're going to have one of those Santa Claus rallies this year?
Yeah, I think as we look at it, as you mentioned, stocks tend to go up at the end of the year. There can be lots of reasons we can jump into in a moment as to why. But this year, quite honestly, I may be a little bit more in doubt, but largely because of the market has been so good, here recently, as we look at sort of the end of the third into the fourth quarter. For many people, there's expecting maybe a little pullback around the election. Obviously, regardless of your personal opinion on the election, at least right now, the market has liked it. And so as we go into things, that gives me a little bit more worry in terms of for this year, are we really going to have a strong rally, around the Christmas time, or perhaps did we already get it?
That's a good point. Maybe we already experienced Santa Claus a bit earlier, a few weeks before it usually arrives. So you sound confident that we might have one this year. Is it just because the market overall has been pretty good lately, or are there other factors that might be contributing to this bullish opinion?
Yeah, there's definitely other factors. Some of them simply have to do with the term window dressing, meaning companies across the board always have an incentive that as they're closing out the year, they're going to then have to report full year earnings. And even though many companies don't operate on a calendar year, in the view of the public, in the view of the market, when they report earnings after Christmas season, they want to report things as high or as good as they can possibly report. And so in many cases, that means will they bring in extra revenue into the year, or if they can they push some expenses into the following year? So it tends to be not in a bad way per se. Obviously they have to apply all the proper accounting principles, but can they pad the books, so to speak, a little bit and make that year end look really good?
It definitely could happen again this year. Michael, you raised a few doubts earlier. You said that there's a chance it may not happen. If it doesn't happen, if there is no Santa Claus rally at the end of 2024 this year, why might that be?
Well, largely, if we look back and say many people expected, as I said, prior to the election, many people expected that there would be some pullback in the market because typically the market doesn't like uncertainty. And obviously, leading into the election, there's a lot of uncertainty. But in reality, the market only pulled back about 3 or 4%. And then right after the election, it more than made it up. And so as we sit here today, says the market's still right around all-time highs, kind of across the board, whether it's Dow, Nasdaq, or S&P 500. And while that doesn't necessarily mean the market has to go down, the old saying, nothing goes up forever, still applies. And so a little bit of natural sort of pullback or settling out, isn't necessarily to be unexpected. And that really may have nothing to do with the time of year. It just happens to be that we've had 3 months where the market's largely gone up 10%, in 3 months, which is certainly above average, regardless of what time of year you're talking about. So that maybe gives me a little bit of reservation to say how much more will we continue to go up, here before the end of the year. But if we do get that Santa Claus rally, it also says, well, then as we lead into January, might we have a little bit of a hangover effect, beginning of the year to go with it.
Oh, yeah, sometimes that happens. Sometimes that follows the Santa Claus rally. The start of the new year ends up a little weaker than normal for those reasons. Looking at the current macro situation, Michael, are you concerned at all about consumer spending? I know right now it seems healthy, but there are some tea leaves that suggest that traffic at some consumer stores has declined. For example, we know we've had higher inflation ratings, higher than expected inflation ratings later, and people might pull back on some types of spending. Or are you confident in everything given where the state of the consumer is?
Well, as you mentioned, I mean, the consumer at the end of the day drives the economy. So consumer spending is still 70+%, of what drives the U.S. economy. And you're right, as we look at things, even though the official numbers on inflation are easing, there's still concern because the middle America has definitely still felt the pinch. And while they say, yes, inflation is easing, that doesn't mean prices are going down. It just means they don't go up as much as they had been. So consumer spending and coming out of the holiday season is typically sort of a telltale sign of how the real U.S. economy or the real U.S. consumer is really feeling. And as we look at that, they've held up pretty well, throughout the years, even with high inflation. And so one of the things that sort of drives the economy and maybe will help some of this spending as we head into the holiday season is if the Fed does continue to cut rates, because that's lower rates on loans for auto, home, et cetera. It's also lower rates on credit cards. So all of those things that the consumers sort of rely on or drive a monthly payment. Well, if the rates continue to fall, that gives people a little bit more spending money, which may lead to maybe a little bit happier, so to speak, results from consumer spending as we get through this holiday season.
Ooh, good point. In terms of specific stocks, we always tell listeners, make sure you consult a financial advisor before making any financial decisions. But are there any particular stocks or particular sectors that you think could do well if there is a Santa Claus rally in 2024?
Well, in here, I think what you said before, obviously, is the sage advice, because ultimately, a stock that may be good for one person is maybe, I kind of equate it to chocolate. It may be even too much of a good thing. So that idea of putting all your eggs in one basket, is usually a mistake. So when we talk sectors, and generally speaking, we always encourage a broadly diversified portfolio. But it also says where if the returns really come from, the last 2 years. If you didn't have a good bias into technology, then frankly, you sort of got left behind, because that's where most of the return of driving the market has been coming from. As we look at things with rate cuts and other things going on, it does tend to be that other parts of the economy will begin to pick up steam. So whether that's some of the small or mid-cap kind of companies, those are things that have sort of been left behind, but are now beginning to participate based on those hopes of lower interest rates. So while we never actually advertise or endorse any specific stock, when we're looking at broad parts of the market, it does say that we're beginning to see some areas other than just technology, come back to life.
I see. So it really kind of depends on those parts as you're seeing it. Real quick, Michael, my last question. What are some questions that investors should consider this holiday season?
Well, as we head into the holidays and really towards the end of the year, one of the things that we really sort of focus on within our firm of financial planning and advising people as they save and prepare for retirement is not to leave out the tax, side of things. And while we can look and say politics aside, with the way the elections turned out, it appears that tax rates will probably remain lower for a little longer, or if they do have to go up, maybe they don't go up as bad is what the current tax law says. So there's certain things, whether it's deductions, Roth conversions, funding your 401ks, certain things that have a December 31st cutoff. And so that's a prime example of either getting with your financial advisor, getting with a tax advisor and saying, make sure that you're not leaving some opportunity on the table when it comes to your overall financial picture, and making sure that from an investment perspective, getting as much money as you can into those tax-free accounts in particular is probably a smart move for everybody as we sort of come to the end of the year.
When we return, we'll hear more about a potential Santa Claus rally in 2024 and sectors to watch. But first, let me tell you how you can become a more informed investor through Early Bird, a free daily email newsletter. Early Bird has commentary on the latest events and trends in stocks, cryptocurrency, and crowdfunding. With Early Bird's daily weekday email, investors can quickly stay on top of the trends and beat the market. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, back to today's discussion. We now welcome investment professional Akshata Balkari. All right, Akshata, welcome to the Early Bird podcast. How are you doing today?
I'm doing well, Stephen. Thanks for having me on.
Well, thank you. We're continuing our conversation here on the Santa Claus rally, if we're going to see one this year or not, and what that could look like if it does show up. Let's kind of start there. Akshata, do you think we might see a Santa Claus rally in the stock market in December?
Well, Stephen, I think there is a decent chance we'll see the Santa Claus rally in 2024. But of course, the overall broader market and the context there will definitely be a huge factor to consider. Historically, the last few trading days of December and the first few days of January usually trying to bring that lift to the market. And this year looks set to follow that trend thanks to some supportive factors. We've seen some economic indicators like consumer spending and employment kind of working in our favor, as well as the Fed's continuing to cut rates. So we're kind of giving the complementary boost from those factors. That said, with markets hitting record highs lately, any end of year bump is likely to be modest at best.
Yeah. How much further could it go this year after what we've seen already? Good point.
Yeah, we're all hoping for the best for our 401ks, but at the same time, got to temper it down considering we're already here at the record highs.
Oh, yeah, absolutely. You got to keep things with proper expectations. There sounds like there still could be a chance where we may not get much of a Santa Claus rally in December. I know you mentioned that consumer spending was strong, but I'm sure there's some sentiment out there that maybe there are questions about consumer spending at the very least. Is it realistic that we may not even have a Santa Claus rally this year? And if so, why would we not have a rally in 2024?
I mean, it's a random event. It's not really something that we can always accurately predict. And we've had it for quite a few years now. We just see that uptick of optimism, investor consumerism going into the end of the year generally. But there's no guarantee, right? It's a nice little boost at the end of the year. But if you're a long-term investor, this is just kind of a blip in the radar anyways. You're not looking for the 1.3% average move really making that much of a difference in portfolio. It's just a nice way to end the year.
Yeah, so just think of it like a bonus for stock investors, for at least for some might think of it that way. So let's assume you're planning your portfolio and you want to be a bit strategic as we approach December and what to potentially expect if there is a Santa Claus rally. Are there any particular stocks or sectors that you think could set up nicely for a potential Santa Claus rally this year?
I mean, I think it's less about the end of the year rally, but more just kind of about maybe post-election kind of positioning. That's more in sight here. I think definitely, again, these are going to be based on several other factors, can obviously change the outlook here. But I think some of the sectors that could possibly benefit, especially in the post-election environment, are like in the industrials and defense space. So companies like Lockheed Martin, Caterpillar, General Dynamics, in that space are going to most likely benefit from some of the infrastructure spending and the more focus on national security from the new administration. So likely upside there. We've seen the tech boom continue to rally beyond extremely high throughout this year, and probably we'll still continue to see a fair amount of upside there in tech. Other investors are also indicating, because of the new administration's likelihood of lessening regulations in some industries, financials could be another area that benefit. I think we saw a pop in, Goldman Sachs and Morgan Stanley a little earlier this week.
Oh, yeah, definitely. Financial stocks could do well in a low regulatory environment, perhaps. There's definitely one of those sectors to look at as something beyond just the Santa Claus rally in December. It could potentially do well in 2025, it sounds like, at least potentially.
Yeah, I think the stage is set for a lot of these firms and these kind of companies within these sectors to perform pretty well. But at the end of the day, if you're long-term investors, you're focusing on various different things, and fundamentals ultimately are what you're drawn towards.
Absolutely. What's some advice you might have for long-term investors as they approach December, the last month of the year, and a potential Santa Claus rally, as well as setting their portfolios up for success as we enter 2025? Any advice you have for investors for who are looking at the market with more of a long-term lens?
Yeah, apart from sector positioning, I think what long-term investors can do to set themselves up for success is make sure that they're doing the basic strategies. Tax loss harvesting as we come closer to the end of the year. They're making sure that their core sector focus is aligned as we go into 2025. Ultimately, if you're a long-term investor, you want to be looking at these fundamentals, so keeping an eye on earnings. We've had some relatively strong earnings for a lot of companies in the past couple of weeks, but definitely something to keep an eye out for Q1, Q2, as you're looking at these stocks over a long period of time to make sure they're aligned with your investment thesis. And that's ultimately why you're keeping something in your portfolio or not.
Yes. And it's a good time of year for many investors. End of the year, beginning of the new year. Good time to sort of look at the portfolio, see what may have worked, what didn't work, plan ahead. Good time of year anyways, this whole potential Santa Claus rally coincides with.
Yeah, it's good. Take stock, right? You're coming into the new year. You're going to maybe, if you want to readjust your portfolio accordingly to the focus areas, depending on, and this is individualistic, right? I have to give the disclaimer all the time. This is not financial advice. These are my opinions and views, and for everyone, it's different, depending on what stage you're at, what you're looking at these finances for. But ultimately, if you're there for the long haul, there are factors you're going to consider, and it's a good time to evaluate for sure.
Thank you again to Michael Neuenswander and Akshata Balkari for sharing your insights on a Santa Claus rally. And thank you to everyone for listening to today's discussion. We'll be back next week for another episode of Early Bird. Have a great day.